Recently in the media, there's been a lot of talk about sellers cutting their prices and inventory absolutely exploding. So, what does that mean for sales prices in the market as we go through to the end of the year? Well, let's check it out. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update for the month of June. So, basically, we do know that inventory is increasing. However, we really want to put a little historical context in that, okay? This is Lawrence Yun, Chief Economist, NAR. Current market's rising prices are the direct result of insufficient housing supply not meeting the full demand, okay? Bill McBride always does great calculated risk. He says he always starts with the inventory since inventory usually tells the tale, and current inventory is increasing year over year. That is true, but it's still well below pre-pandemic levels, okay? If you watch my YouTube channel, you know that basically we talked a lot about the unicorn years during the pandemic, so we're going to talk about that. This was incredibly interesting. Again, from Calculated Risk, this is the first week of June, okay? Looking at inventory. When we compare that to the same week a year ago in 2023, we're up 38%. However, when we compare it to the first week in June for 2019, right, that's like the last regular year before we got in the pandemic, we're still down 35%, okay? That's huge. When we look at existing home inventory here, this is basically for May of every year, according to Realtor.com. You look at where we're at in 2024 right now, okay? Yes, inventory and active listings are definitely increasing. Things are taking longer to sell. We do know that as a function of higher mortgage rates. But when we look at where we were in 2017, 2018, 2019, we've still got a ways to go, okay? Looks something like this. When you look at our current inventory, this is what you're hearing right now in all of the news, right? Inventory is way up, especially compared to last year. That is true. However, when we look at it, when we throw in basically pre-pandemic years, 2017, 2018, 2019, they're way up here, okay? This orange line is 2020. This right here, where you see this decline right there, that's basically the start of the pandemic. I do think our inventory is going to cross over where we were in 2020 this year, and that's probably a good thing. When we look at it graphically across the country, this is what it looks like as far as year over year increase in inventory. Now, keep in mind when you see places like Florida, 70%, Arizona up 68%, Washington, 52%. A lot of this is contributed to new construction. We're going to talk about that in just a little bit because it really can't be overstated, and those numbers right now are significant. Realtor.com, though, again, this is a little bit more context, right? Sellers continue to list their homes in higher numbers this May. They were 62% above last year's levels, right? While notable deceleration from last month's 12.5% growth rate, it marks the 7th month of increasing listing activity. That's a big thing. However, that's after a 17-month streak of decline. So yes, we've had inventory growing over the past 7 months, but again, we had 17 months of decreasing inventory that we still are trying to make up for, okay? When we look at our last year's listing, same thing, right? You look at this dark green line, this is 2024. Yeah, definitely, obviously well above last year, 2023. Remember, last year was the first year when we saw interest rates double for the first time ever. So obviously that put an artificial, kind of the brakes or a suppression on the market. So we're definitely above where we were. But remember, before the unicorn years, we've still got a ways to go, okay? Why are listings up year over year? Well, the lock-in effect has been easing a bit. This is basically according to the CEO and founder of Resi Club here, Lawrence Lambert, very smart person. We're talking about basically, mortgage rate shock has kind of receded. And also really people's circumstances have changed quite a bit, right? And they also know that waiting for the market to change or waiting for rates to come back down probably isn't going to happen anytime soon. So they're going to have to take some action. We also realize too, there's a lot of newer investors over the past couple of years that are realizing things are a lot more difficult than they thought, and they're choosing now to exit that landlord space, okay? So basically, Altos Rechos, after 2 years of higher mortgage rates, sellers are slowly coming back to the market. We'll continue to have gradually more sellers, that's true. But this is something that cannot be overstated right here, okay? This is basically the amount of new construction inventory that's currently on the market right now. 1 in 3 homes on the market today are new construction, right? 31%, okay? Keep in mind that when you look back all the way back to 1983 to 2019, you're talking 35 years of historic data here. The average was about 13% for new construction in the housing market, okay? In other words, right now, when you look at 2024, we have essentially doubled that That's huge. Okay. The new home market has been outsized share of housing inventory. This is basically Bright MLS. But realize that home builders have basically been able to kind of crack the code with some rate buy downs. They're being very creative in attracting new clientele coming into new homes. And just realize too that we really do need these new homes. It's going to help to actually balance the market. When we look at total number of home sales now forecasted, we're looking at somewhere around that 5 million home mark this year, which is good news. Again, Lawrence Yun, chief economist at NAR, said job gains and steady mortgage rates are, basically the release of inventories from pent up sellers are going to lead to more sales. And basically, given the lingering housing shortage, home prices will march higher, albeit at a much slower pace. So again, you hear a lot of this in the news right now that all these home sellers are having to cut their price. That is true. We're still very much in a seller's market, and we're seeing people having to cut their price. But realize just because somebody cuts their listing price, their asking price, doesn't mean that we've seen home prices declining, and we have not. Okay. So home price forecast, Zillow and Freddie Mac just basically adjusted this past week down a little bit more. But still, when we look at the average, we're talking about 2.9% appreciation. Again, that is our historic average over decades, over the past 60 years. We've pretty much, counted on home prices appreciating around that 3 to 4% level, right? Increasing with our normal consumer price index. So this is basically right where we want to be. Okay. Jessica Lawrence, chief economist NAR, said one thing that seems pretty solid is that home prices are going to continue to go up. And the reason is that we just don't have the inventory. Okay. Projected rates, we're looking right at about, the mid sixes here. Although we do have a lot of people saying we'll probably see a rate cut at the end of the year. I'm kind of over predicting rates. I did make a prediction at the beginning of this year. We'd have a handle of 5. That's probably now not going to happen. But I thought this was interesting right here. According to the Wall Street Journal, look at all these banks that are indicating that we're probably going to see a rate cut in September, okay? Which is really good news for buyers. Keep in mind that last year, 76% of buyers stepped away from the market, okay? And these were the number one reasons over here, right? Mortgage rates too high, home prices were too high, they were unsuccessful in competing against cash offers, or they just couldn't find the home. So hopefully, if we do see a little bit of a mortgage reduction here towards the end of the year, definitely going to help some buyers. There's a couple of other things that are going to help buyers as well too. And this is, Daniel Hale, basically chief economist, realtor. Home shoppers who persist, this is into the second half of this year, could see better conditions in the second half of the year, which tends to be somewhat less competitive seasonally, and it might even be a little bit more inventory as that's been growing. So definitely good news. Like I said, home inventory here has been growing, right? We have a less buyer competition. This is all good news for buyers. More new construction coming to the market, and home prices are starting to moderate around that historic average of 3%, right? Keep in mind, like I said, if you watch my channel, I always use this graphic. 6 months of inventory is a healthy market. Anything above that's a buyer's market. Anything below that is a seller's market. We are still very much in a seller's market. It's just that things are taking longer to sell because buyers are being pressed with just, crushing affordability issues. However, these 4 things combined can definitely start to help some buyers. So first half of the year did not meet expectations regarding home sales, but definitely exceeded expectations in prices, right? Lawrence Yun, again, chief economist NAR. The second half of 2024, they're looking for more moderately lower mortgage rates and higher home sales with stabilizing home prices. Probably definitely true. Now, these effects have definitely been seen in the San Diego market as well too, okay? Keep in mind, these are all housing types in San Diego County, the entire county. These are all median numbers, and the percentages you see are year-over-year improvements. But the median sales price right now in San Diego, $925. Man, that is just huge. Up 10.8% year over year, okay? Active market time is 14 days. That's up 27%, right? Realize that means things are taking longer to sell, okay? Sales price per square foot is up 7%, but also same thing, inventory. We have seen inventory grow. Inventory is up 50% year over year. However, remember, we're still only at 2.4 months worth of inventory, and we need 6 months of inventory for a balanced market if you want to see this price start to come down, okay? Remember, everything above the line are our lagging indicators telling us where the market has been. Everything below the line are our leading indicators telling us where the market is going. And we're seeing a little bit of good news. This active listings up 41% and new listings up 3.5%. This is good. This is this inventory building that we really want to see. Pending listings are still down though, and our sold listings are still down almost 10%, which basically is an overall indication of our volume. Again, things taking longer to sell due to affordability. So that's about it. If you have questions about, what do these numbers mean? What's going on in my neighborhood? Is this a good time for my family to be buying or selling? I'm more than happy to answer any of those questions that you have. Just reach out. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.